All right, Steve Weiss, who has Apple, Microsoft, Amazon, Facebook, and Alphabet. Apple reiterated outperform today in Baird. They expect strong results. I told you Microsoft's new street high target there. Amazon gets a new target of 48.50 at Credit Suisse. That's a 32% upside from here. Alphabet reiterated buy at MKM Partners. Margins and cloud matter for the second half bulls. We told you what that stock hits a new high today. Facebook reiterated buy at Bank of America. What do you expect? Because the street just continues day by day by day, week by week to get more bullish.
Yeah, and so you came to the right place. So while Farmer Jim's asking the questions, I'm going to give you the answers. And here's the answer. Any one stock doesn't matter. You've got so many reporting, some within minutes of one another, that it's going to be the totality of the reports that's going to be important for the market. But I do expect to sell in the news because the expectations have been set so incredibly high that even if they beat those, they're going to pause. And they should. Nothing goes up in a straight line forever, and that's what we've seen. Apple, this is not an important quarter for Apple. The next quarter will be important because that's when they'll have the front end of hopefully a new phone. That's supposed to be, again, the biggest phone they'll ever sell. In terms of Microsoft, people lose sight of the fact that this is like a fashion company with no competition. And by that, I mean that as long as they come out with the new fashion, with the new Windows operating unit, you've got to upgrade. So all the companies will upgrade. So it's got a perfect subscription model. So that, to me, is one that you don't have to worry about that much. In terms of the others, look, Snap, Twitter gave us a good window, as you pointed out correctly, into the advertising market. So the question you do have to ask is, are they taking share, or is the market continuing to expand? My bet is the markets continue to expand. That's where the dollars are going. So I'm fine with these. I don't expect the market to have a huge move either way this week. The Fed meeting is as important as any single or all the companies reporting together. And I think you've seen enough weakening economic news, including home sales today, where Powell's going to keep going with what he's been going, although there is the chance, and I think they should, do some cutback on the tapering. But you'll hear more voices in the commentary saying that's the way to go. But it's going to be same old with the Fed on Wednesday afternoon.
So have
not
given
a lot to get. There's a lot to get excited about. I'm sorry. There's a lot to get excited about in the market. But at the end of the day, I don't think it'll be very exciting.
Okay. As I was going to say, and you've done it yet again, you've teed up our next guest perfectly. Because FundSTRAT'S Tom Lee says a more risk-on environment is going to start either this week or next. He is with us right now once again. Tom, good to see you again.
Great to see you, Scott.
Why is this about to happen, Tom?
I think the principal reason is we're finally getting some visibility that the Delta variant is rolling over in the UK. And I know it might sound strange to be talking about why the UK matters, but as you know, the Delta variant went parabolic there first in early June. It lasted for 45 days. That country has a vaccination rate similar to the US, and I think really demographically similar. And it looks like Delta doesn't just run through the whole country. It finally hits an endpoint. So 45 days later, which was July 17th, it's rolling over. I think that's going to mark the bottom for this whole risk-on fear. And that's why we think epicenter stocks really ignite either this week or next week.
Okay. So JP Morgan, just moments ago, was talking about Delta not a serious threat to growth. Goldman's David Kostin last night poses a minimal risk, he says. I mean, is that what the market is showing you today, at least for starters? Tom, it's sniffing out the exact UK data that you just referenced?
Yeah, it's interesting because if you did an overlay of the UK and even some of the Wiggles, the case trends, that really was the inverse of epicenter stocks. But it makes sense because the Delta variant scares people because it evades vaccines. It's 1,000 times greater viral load, and the R0 is like 9. So there's a fear that this would be hard to contain. And as you know, that even feeds into monetary policy, CapEx. I think it's something even businesses had to address in earnings calls. So it's pretty central to sort of the reopening narrative. And that's why I'm personally relieved that there is, a break point, that Delta runs out of people to infect.
Your target remains 4,600, but you just mentioned it plays into central bank policy. If cases are going to roll over here in the next 3 to 4 weeks, doesn't that bring the Fed back on the table to start their taper maybe sooner than people expect? Does that upset your thesis in any way?
Scott, that's certainly a risk. But as you know, Delta is one of only 6 variants that are being studied by the WHO. You know, another variant of concern is Lambda in Latin America. So I think Delta is sort of a queue of many. And I think there's still going to be central questions about how long vaccinations last before boosters needed. These are all going to be part of the Fed's thinking.